Welcome to another episode of Aliyah Money Talks, brought to you by Blue and White Finance. I'm thrilled to be here talking about a subject we get so many questions about, that people are so interested in learning about and making sure that they're kind of on top of, which is Israeli tax reporting, understanding what are your obligations to the Israeli tax authority, who has to kind of worry about these issues. So I'm really excited to have a Israeli tax expert, an international tax expert, Eliyahu Freed. Welcome to the show. Why don't you start us off and tell us a bit about yourself and your work?
Well, thanks, Aaron, for contacting me and for this interview. Um, in short, I'm Eliyahu Freed. I live in Israel. I was born in Israel. My parents made Aliyah in 1982. I live in Gush Etzion, and I'm part of a family business accountancy firm. We have an office in Israel, in Beit Shemesh. We have an office in London, in Zurich, Switzerland, and Hong Kong. We specialize with international tax planning, and we speak English in the office, so it's very convenient for Olim or people who who prefer to speak English with their accountants. And we have a full practice in Israel and UK, which does A to Z packages of reportings, tax planning, and any tax requirements.
Awesome. Very cool. So
yeah, that's in brief about it.
Great. We're happy to have kind of an international tax expert. I think so many Olim kind of run into lots of confusing issues around Israeli tax and where it hits. So let's jump into these questions. Why don't we start with the Aliyah tax holiday? Explain briefly what it is and who it applies to.
Well, in 2007, there was a new tax law, Section 14A in the Israeli tax law, which basically gives a very generous exemption for people who become Israeli tax residents for the first time. And I'm especially not using the word making Aliyah, because it's very important to understand what does that mean when someone becomes Israeli tax resident for the first time. It also applies, by the way, for returning senior citizens, which is a similar case for people who made Aliyah, people who've been living outside of Israel for over 10 years. But let's focus on the people who are making Aliyah. Assuming a person who makes Aliyah is actually the first time he becomes Israeli tax resident. And I'll give an example what doesn't mean, when someone can be making Aliyah by his tax residency started beforehand. For example, yeshiva bochum who come to study in a yeshiva in Israel, single, not married, and they sit down in Israel and for, let's say, 3 years. After 3 years, they get married and they decide they want to make Aliyah. So the 10-year exemption, which I'll touch in a second what it means exactly, the 10-year exemption doesn't exactly start when he made Aliyah. In this example, for the Shiva Bacher basically started his 10 years tax holiday 3 years or since he came to yeshiva. The fact that, for example, his wife made Aliyah and wasn't a tax citizen beforehand, so her 10 years will apply since she made Aliyah. But that's something which is very important. I've come across many cases where people haven't made Aliyah and been living in Israel, for example, for 10, 15 years. And they work on the assumption that once they'll make Aliyah, they'll get the 10-year exemption. So that's the first thing which is very important to understand. When did your 10-year tax holiday start? Now, what is this 10-year tax holiday? Basically, it gives an exemption from paying taxes and reporting. And the reporting issue is very, very important to understand, especially the way the world is going with all the FATCA and the CRS and all the information running around between the tax governments. So basically, it means that any income that's derived outside of Israel, and I'm using the word derived, and if it's hard to express what I mean, what air are you breathing whilst you're working? Okay, so for example, if someone has a business in Israel, or he has a UK company or a US entity or Australian, you name it, wherever you want it to be. But basically, the person is sitting down in Israel and giving consultancy advice, managing his business back from Israel. So that income is not something that a person can claim that is derived outside of Israel, because it's actually physically being done here. The fact that the entity is a foreign entity gives us some flexibility or exemptions, but just to understand that when I say the work derived is where it's actually done. Where is it very clear where work is derived outside of Israel? We usually look at when we're talking about passive income, when it's rental income, so it's very clear where the property is. When we're talking about dividends, capital gains, interest, so it's very clear who is giving the loan, where the money is, what company is paying out the dividends, and therefore all the income that's actually derived outside of Israel, as I said, is exempt from paying tax and from reporting. Okay, there are things which, or some cases where I would recommend reporting income in Israel, even though someone's in his 10 years. But that's mainly for, it's not a tax issue. It's more being where you say, don't be correct, try to be clever. For example, people who bring in money into Israel, high volume amounts of money, then the Israeli banks might turn around and say, well, please give me a letter from an accountant, or some provide me proof that the income is all that the money you're transferring is tax compliant. So sometimes reporting in Israel, but not even paying tax, just reporting is beneficial. One issue which I've come across that people are not aware of and could and should be taken into account, there is no 10-year exemption for national insurance purposes, i.e. in Israel, if you have income, which if it would have been reported in Israel, you would have had to pay national insurance on it, then even though you're in your 10-year exemption, although for tax purposes it's exempt, for national insurance it's not exempt.
It's not.
And that's something which has to be taken into account when planning your structure of how you're going to work and what income is going to be reported where and how. There are things which can avoid this double or the national insurance issue, but again, it has to be looked at.
Yeah, I think so many people. It's great that you emphasize where the income is derived. I think so many people, when they think of I'm being paid by a foreign company or I have clients outside of Israel, that means the income is derived, and you're clearly explaining that that's not what it means. The source of the income is the air you're breathing. Where are you doing the work? And it's really important that people get proper tax planning, especially if you're working overseas and you move to Israel. You're traveling a lot overseas. There may be great tax planning opportunities there, and it's great that you point that out. If we kind of fast forward to the end of the 10-year holiday, right? I think a common challenge that people come up with is, okay, now I've got all this foreign sourced income. Maybe I'm saving. I've got interest I'm earning in my bank account. Maybe I'm got passive dividends, passive income. I'm not in my 10-year holiday anymore, right? Do I need to start reporting that? How does it work? Is there a short version of reporting that do I need to do a full doch? Do I need to do a full tax reporting, or is there a short version that I can use to report that income?
Okay. The Israeli tax law is very clear who has to submit a tax return and who doesn't. I'll start from the easier side. Who doesn't have to report? A person who has his taxes deducted at source, okay, and the correct amount of taxes deducted at source, doesn't have to submit a tax return in Israel. Usually, it narrows down the options to only someone who's employed by an Israeli company. Okay, it has a 106 form, so his employer basically deducts national insurance, deducts taxes at source, and then he doesn't have to submit a tax return. All other individuals have to submit a tax return in Israel. Okay, it's not a question of from a certain amount or what source of income, or even if someone, for example, I've come across cases where people have losses. They have rental income from overseas. By the time they claim the depreciation in the US or the expenses, or they've paid already taxes overseas, there's basically no further taxes to pay in Israel. Or sometimes there's a loss. People turn around and say, listen, my income is my expenses have increased the amount of income, and therefore I don't have any profit. Do I need to submit? Well, the straight answer for that is yes. You have to submit even if you have a loss. Now, there
Right.
is an advantage of submitting a tax return with a loss. The advantage is that basically you're carrying forward the losses. So if in future years you have profits, you'll be able to claim it. So that's like a straightforward answer. There are shorter versions, longer versions. The shorter versions are basically they're almost the same.
Okay.
So it's not, there's no really big advantage of going the shorter version. I've come across a lot of cases where people thought they didn't have to submit a tax return, and once they understood they do, in actual fact, they actually got a tax refund. It could be for many reasons. People donate money, and therefore they're entitled to tax credit on the donation, the 35% of the donation. They have a life insurance. Any person who has a mortgage has to have a life insurance. 35% of that is a taxable refund. Sometimes someone has a new child, a new baby, and he didn't update his employer, and therefore he didn't give him enough tax credits. There's all kinds of things in the Israeli tax law which give you tax benefits that not always, if you're hands-on, you'll get those benefits, and therefore a lot of times people can find themselves actually having a tax refund. So another example is if someone changed jobs in the middle of the year. Not all bookkeepers of the new employer know how to
handle that.
input into the system, into the bookkeeping system, the amount of income received up until now, and to do the adjustments. So therefore, they can find themselves one of the two options, which are very common: either they've underpaid taxes, or they've overpaid taxes. If they're underpaid, they don't want to submit a tax return, but unfortunately, sometime along the line it will be picked up, and then they'll have to pay more taxes with inflation and interest added onto it. So therefore they'll lose out on that side. Or they've overpaid, and therefore, why not submit a tax return and get back the tax refund? On that side, I'll mention that you can go back 6 years on a tax return. But that's for claiming, that's if in a case where, according to the law, you didn't have to submit a tax return. Therefore, you can't wait 6 years, go to an accountant and tell him, okay, let's submit 6 years tax returns, if he had to submit a tax return beforehand. There's a few more definitions or things which, even if someone is employed, he has to submit a tax return. That's in case that someone's salary is it changes slightly every year, above 646,000 shekels of a salary, then you have to submit a tax return. Okay. If someone sold a turnover of a portfolio he has, even if it's managed by an Israeli bank and it's all tax deducted at source of, I think it's about 2.5 million shekels turnover.
Big
and
portfolio.
Also, if someone has market value of assets overseas, and a market value could be even a bank account or a pension fund or
a 401k,
asset,
an IRA, any asset.
Exactly.
Okay.
Yeah, or a property, anything which is above, again, increases every year slightly. I think this year it's about 2 million shekels. Then you have to submit a tax return, even if your salary is 300,000 shekels and all tax deducted at source. There's another thing which I would mention here. I won't go into it too deeply, but a trust issue. Okay, yeah, we deal with trust. We're trustees of trust, and one of our big advantages, we touch a very unique niche in tax planning, which is called trusts. It's very common overseas. And Aaron, if you want to move forward, tell me.
No, this is good. No, we were going to touch on this, so it's good that you're touching on this now, because I think a lot of people are trying to understand
Let's talk about trust. Okay, let's talk about trust. Since 2014, there was a new trust law in Israel. Basically, it states that any potential beneficiary of a trust that is Israeli tax resident, and it even says someone who hasn't been born yet. Okay, it's a really tough law. Um, the minute it says even one beneficiary or potential beneficiary of being Israeli tax resident of a trust, no matter where the trustees are, no matter where the assets are, no matter where the set law is, no matter that 99% of the beneficiaries are not an Israeli tax resident, this trust in full falls into the Israeli tax net. And that's a very aggressive thing which people, because it's trusts are so common to be used overseas, it's a simple structure, the banks know how to deal with it. It could be very problematic. We can find, I've found many cases where people, grandparents or parents have set up a trust overseas in the US, in the UK, or Liechtenstein, or you name the place. And their children, or one of the grandchildren who is a potential beneficiary of the trust, it doesn't mean that he's registered at this point in time as a beneficiary, but the potential beneficiary has come to live in Israel. And therefore, this trust can literally fall into the Israeli tax net. And that's something which you have to be very, very careful, and you have to restructure before any beneficiary comes to Israel. It's not something which you can do retroactively, and the tax office attack it very strongly. Now, someone can turn around and say, well, sometimes the beneficiary doesn't even know he's a beneficiary. That's cases I've come across. That's number one. Or number two, someone can turn around and say, well, he's a beneficiary. How will the Israeli tax office know about it? Well, as I said, one of the things that someone has to submit a tax return, one of the boxes you have to tick is if you are a beneficiary of a trust. And if you are a beneficiary of a trust above the age of 26, you have to submit a tax return and tick that box, even though you might have not ever received a distribution, even though you have no other income. Yeah. You have to submit a tax return with that box. And as everything's done today electronically, so the information is just running around and sitting on the system. Yeah. And eventually, when the systems will be clever enough to analyze all this information, then people will be starting to receive letters automatically from the Israeli tax office, be called in for meetings, for discussions, and then it will pop up. So there's no more of this thing of, well, no one's going to know about it. Unfortunately, the world has changed. It's not what it was 5 years ago, not 10 years ago, not 20 years ago. Everything's electronically. And, even let's say the tax office won't pick it up. Eventually, this beneficiary will want to receive a distribution from the trust. And when a bank in Israel sees a distribution from a trust, they immediately freeze everything and they start asking questions. Yeah. So if you're not tax compliant, there's no way this money is going to be reaching your Israeli bank account.
Yeah, makes sense. So let's take a little bit of a step back to some of the maybe simpler cases. And this is one of the cases I hear about very, very often, which is, all right, somebody makes Aliyah. They move most of their assets to Israel. The 10-year Aliyah holiday ends, and they have maybe $5,000 left in a checking account in the U.S. and some other country. That checking account makes $10 of interest. They kept their money at one of the big banks that are paying no interest, and they make $5 or $10 of foreign sourced income, foreign income. Their 10-year Aliyah holiday is over. Do they have an obligation? Is there a reasonable expectation of some sort of minimum that they wouldn't need to report, or is any dollar required by law to be reported?
Any dollar by law is required to report. There's no such amount, or in the tax law, there's no definition if someone earns above this amount. Or there are, as I said, there are short reports which could be done. Yeah. Okay, so for example, someone has a salary in Israel and does have this checking account, and he earns, I don't know, $20, $30, $1,000 of interest per year. So he doesn't really have to submit a full tax return. Okay, assuming the value of all his assets is below the 2 million, or what I've just mentioned. So basically, he can take a voucher, go to the post office, put the amount of income, pay 25% straightforward with a check, a credit card, cash, it doesn't matter, at the post office, and that's the end of those tax reporting obligations. Okay? As I said, there are shortened ways of doing it. Is it worthwhile? Is it not worthwhile? Every case is separate. Will someone do the correct calculations? Are you able to take in the bank fees and the management fees and all those stuff into account? Again, as I said, you can go for the short version. Yeah. Is it worthwhile? Again, for small amounts, yes, but the minute it becomes a bit more than $20, $30, then it's probably worthwhile doing a full tax return and making sure this bank account is compliant for Israeli tax purposes, it's been reported, and money will come in and there'll be no problems. Unfortunately, the banks have caused us or brought in for us quite a lot of work because of what's going on today with the money laundering and cash moving around. So things have become a bit more tough, and someone has to make sure he is 100% tax compliant. Otherwise, he's going to have problems moving money around.
Yeah, I think so many Olim, they kind of are pretty intimidated by this Israeli reporting process, and they assume that this is a big additional expense and things like that. And that might be true, but I think you should kind of realize that most Olim do keep some assets outside of Israel, some sort of savings outside of Israel. Maybe they have some sort of income. It could very well be that, Israeli reporting is part of your obligation and something you just have to know that that's something you're going to have to deal with after your 10 years are up, or even before your 10 years are up in certain cases. And that's something you kind of have to take into account. So I'm glad you're providing some clarity. If we look at another case, let's say somebody who, like you said, checks all the boxes, they do have no obligation to file taxes in Israel. When might they still be interested in something like a Tofes 135, like a Hechser Mas, doing something that, proactively gets them some sort of a tax refund? When might they want to consider that option anyway? What are some examples?
Okay, it's very simple. I've touched it briefly beforehand. Basically, if someone has no tax obligation to do, it's very advisable that once every 6 years, he goes to an accountant, brings in all his salary slips, brings in all his donation slips, all his donation receipts, his life insurance, and submits a 6-year tax return and gets back a refund. People who donate big amounts of money along the year, it's advisable not to wait for 6 years.
Do it.
It's advisable for them to submit a tax return every year and get the refund and immediately. But that's when we're talking about people who donate 20, 30, 40,000 shekels a year. That's about the amounts we're talking about. Below 10,000 shekels donations a year, I would wait for 6 years. Above that, I would advise to submit a tax return. The reason why I'm saying the amount of donations is because it should be worthwhile for the client to submit a tax return and to get the tax refund and to pay the accountancy fees. Yeah. Below that, from my point of view, it's worthless, and all the tax refund will probably go for the accountants. So why do it? The idea is to get the money back to you, not to the accountant. That's basically my advice. There's two things which they might be on the question list later on, but it's in my mind and I want to touch. I've come across a lot of people who've made Aliyah, mainly US younger generation, I would call it, in the 20s, 30s, 40s, okay, which basically they keep the salary and the business and the income from the US. Now, as far as I'm concerned, they submit a US tax return because that's the tax obligation to the IRS. Yeah. And they pay taxes accordingly. Two things I've come across which are very important for people to understand. A student or someone who moves to Israel, married, children, it doesn't matter. Okay, a Shiva Bacher, it doesn't matter. But if he's sitting on a student visa in Israel, which basically doesn't allow him to work from Israel, and he's keeping his US income, he's walking into a problem here. Why is he walking into a problem? Two reasons. One, as I said, even within the 10 years, the work is derived from Israel. That's problem number one. Therefore, if the tax office find out about this income, they'll turn around and say, listen, although it's a U.S. company paying, according to the tax treaty, the income is derived in Israel, and therefore we should be the first country to get the tax bite. If we imagine the taxes as a cake, then Israel should get the first piece of cut, and the U.S. should get the remaining taxes. So that's number one. Problem number two they would face, they might walk into a legal issue here because they're not allowed to work from Israel. And I've come across this so many times that people are literally haven't made Aliyah, and therefore they're sitting here on a student visa, which doesn't allow them to work on one hand. On the other hand, they want to be tax compliant. They turn around and say, listen, I'm working from Israel. Let me pay the taxes here. But it's on a W-2 or 1099 or K-1, all the options. And that's a very, very big problem, which I'm coming across. And people have to be very careful because they don't want to find themselves someone knocking on the door and turning around and say, listen, you've broken, the walls, you're not allowed to work from here, take your stuff and get out of Israel. That's the last thing someone wants to find himself facing.
In that situation.
So that's something which is very important for people to understand, especially people who turn around and say, listen, I haven't made Aliyah, I don't have an Israeli ID, I have nothing to do in Israel. It's not correct. One more thing which is important relates to when someone becomes Israeli tax resident for the first time. According to the tax law, you don't have to have an ID or you don't have to make Aliyah in order to be Israeli tax resident. And it's very important to understand the difference between a residency and a tax residency. People can be a resident of a country, but it doesn't mean they are tax residents. Take myself for an example. I have a UK passport, okay, because I was born to UK citizens, and I'm entitled to a UK passport. So I am a UK citizen, but I'm not a UK tax resident. I don't have to submit a tax return unless I have income in the UK. So that's one example. Let's take the opposite example. Someone who's a US citizen comes to Israel, lives in Israel, gets married, children, everything's in Israel, live in Israel. But they've never made Aliyah. They're sitting here on a student visa. So they in some circumstances can be Israeli tax residents. When would they fall into the Israeli tax residency net? One of the two options. We call it the central life test, and we call it the amount of days test, the days test. According to the Israeli law, it's a chazaka, it's a
presumption.
The default that someone is Israeli tax resident if he's been more than 183 days a year in Israel. That's a default. Okay, and what does the default mean? It means that if you want to claim that you're not an Israeli tax resident, chovata hochacha alecha, you have to prove wrong to the tax office. It's mamash gemara here.
Guilty until proven innocent, right?
That's exactly. That's how it works. That's the days test. The central life test is basically where your central life is, and here you go to court cases in order to understand when a central life is in Israel and when it isn't. And it's basically you're taking all the options and putting it on a scale, and where the scale to what side it falls, that's how you know if your central life is in Israel or it isn't. I'll give an example. What does central life mean? First of all, it's where your children is, where your family is. Okay, so if your children are above 18, it doesn't affect this. But if your children are below the age of 18, that's one of the things they'll look at, where your children are, where you're a member of a community, where your gym is, where your car is, where your bank account is, who is your employer. And those are the things that the tax office will turn around and look at if you would claim you're not Israeli tax resident. So that's very important to understand, because those are the things that I come across on a daily basis, that people turn around and say, well, I haven't made Aliyah, so I'm no Israeli tax resident. No, it's not 100% correct. You have to be very careful about it. And as I said, the 10 years starts when
you're a
you
resident.
became Israeli tax resident, and not only when you made Aliyah.
Yeah. Yeah. Great. So another, I guess, unique case, maybe you can touch on. Give us, I guess, some examples, some cases where a minor, a child, might be required to report in Israel, or the parents of the child might be required to report on the child's behalf. When might a kid need to be paying Israeli and reporting Israeli taxes?
Well, a child below the age of 20, okay, who has passive income. So the passive income is tax on the parents.
Okay.
Okay, active income is a different issue. A child, I think, above the age of 14 or 16, or any age, can basically get a salary, and it's taxed on him. To open up the business, the parents have to go over into the tax office because they take responsibility on his taxes. But basically, I know overseas, for example, I go back to the UK. That's our strongest point. We have a UK office. Um, we've done amazing tax plans where basically one property or few properties can be split amongst grandchildren, children, and each one can benefit his personal allowance in the UK, and that's how you reduce your UK tax liability. Okay, obviously it's backed up with documents. It's not artificial. Yeah. It's real. Everything from the Israeli perspective. In those cases, most of the times, if it's a gift, for example, we'll go back to the person who gifted. So if the grandparents gifted the property and the children are below the age of 20, then all the income would go back to the grandparents. But if the child's are below, it wasn't a gift. Let's say the property was purchased by the child, so the income would be taxed on the parents, and the parents would have to submit a tax return. And,
okay.
One more important thing, you're talking about who's taxed on what. From the Israeli perspective, a married couple, all the passive income is taxed on the person who generates a higher active income, active salary or active business income. So there's no such thing as registering a property, for example, on the wife and claim and reporting the income in Israel on the wife, or the husband registering it on the husband if the wife has a higher income, and then playing around with the tax credits. It won't work in Israel. First of all, you can't split the income into 50-50 if it's registered on both names. It would be 100% of the income would be taxed on the person who's earning more active income. Okay, so that's another thing which is important. There is some playing around here with in cases where a married couple, one is in his 10 years and the other isn't in his 10 years. So that's something which should be looked at. Again, because this issue of the active income, then you have to be very careful on who has to report when and what. Because, for example, if I had someone, the wife just made Aliyah, the husband been here for 11 years, and therefore they turn around and the property is registered on the wife, or the company is registered. She's a shareholder of the foreign company.
Stocks, yeah.
And they turn around and say, well, passive income derived outside of Israel. She's in her 10 years, so we're exempt. It doesn't exactly work according to the Israeli tax law that way, and therefore you can find yourself, although everything's registered on the wife's name, although she's in a 10 years tax holiday, you can find that according to the tax law, Israeli tax law, the income is taxed in Israel.
Got it. So you need to plan accordingly for that kind of stuff. Great. So I think we covered a lot of different reporting topics. We talked about trust. We talked about children. We talked about, foreign income, even, with no minimum. If you have foreign income after 10 years of Aliyah, you'll need to report it. Is there any other common cases that you come across that of people, they don't realize they need a report, or that there's potential reporting obligations that, Olim just don't think about that are very common that might be worth mentioning here before we wrap it up?
Well, the classic thing is that someone has I don't know, he has a bank account offshore or wherever it is, and he according to his assumption, he has no income. Okay,
Okay.
why? Let's say the interest is very low, and the bank charges and the account fees are very, and the management fees are very high, and therefore he assumes he has no income. So as I said, the fact that someone doesn't have a profit doesn't mean he doesn't have income. That's number one. Number two, I've come across that there are some cases where people invest in a unit. Okay, now what's something which invest? Or they have a portfolio, which basically the instructions for the portfolio managers are don't give me any income from dividend
Don't
and
distribute.
interest.
Right.
Any income that's received, just leave inside the pot, and then reinvest it. And then, and after 5-10 years, obviously the portfolio is worth a lot of money. So that's something which, from the client's point of view, has no income. He says, "Listen, I didn't get anything. Look at my bank statements, no income." On the other, but the truth is, it's not correct, because there is income. It's reinvested, and therefore you should be reporting this income along the year. Now, here you fall into problematic issues, because you have some pension schemes or investment portfolios or tax benefits for UK law, for US law, long-term capital gains, short-term capital gains, that for Israeli purposes don't apply. And therefore, you might be compliant in the UK, in the US, and everything's fine, but from the Israeli perspective, it's not being done properly. So that's another option. The other way of investing, the way to avoid this tax issue every year is, as I said, sometimes people invest in a unit. What's a unit? He invests, I don't know, $1 million he purchases a unit. And that's what it costs him. It costs him $1 million. This unit invests, has an income, and we invest all the time. After 20 years, he sells the unit, and I'm specifically saying he sells the unit itself for $2 million, and only then you'll have a tax event. Because that's, you purchased and you sold the same thing. But if it's a portfolio, you can't turn around and say, well, I invested $1 million and it's reinvesting. No. That income, which is derived along the years, has to be reported.
Right. I think there's many ETFs that, not for Americans, but for everybody else, right? Americans can't use these type of ETFs, but there's many ETFs that kind of reinvest within the fund itself, and they do not distribute these dividends. So it's not reinvesting within the portfolio, but it's reinvesting within the fund itself. And in that case, many Irish domiciled ETFs that non-Americans tend to invest in. In that case, generally, you're saying it would not be considered income because there was no distribution. Correct?
No, no. What I'm saying is, you don't have to get distribution,
right,
to be taxed. Okay, it's the actual income.
Okay,
and that's probably where people get a bit confused, because they say, "Well, I didn't get any distribution." So I turn around and say, "I understand you haven't received a distribution, but for Israeli tax purposes, you're not taxed on the distribution; you're taxed on the income." Okay, so if you have income along the years, and after 5 years you took a lump sum of distribution, you're not going to be taxed on this distribution. Okay, now take what I said, put aside, that's on a portfolio. I'll give you an example where there's two ways of reporting. People who invest in LLCs, for example, where it's a see-through entity. And what happens is, they don't get a distribution. The LLC or the partnership distributes money according to the investment scheme. It's nothing to do with the income which is derived. Okay? Now, I believe, as I said, keeping things constant, i.e., every year report your income. So if, for example, someone would give me a K1, I would look at the column and the K1, I think it's part 2 or part 3, which basically represents the income from interest, from dividends, from long-term capital gain, and I would ignore the column of the distribution. There are some accountants which take a different opinion, a different view, and they turn around and say, no, 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 we're going to only tax you in Israel on the distribution. Now, my problem with that is that when a distribution comes through, you have to know how to split it between the capital and the income. A distribution comes in, it's 100%. And
Right.
it's not always very clear. Then people can find themselves being taxed on the capital, which I think is
On
wrong.
the money they put in
So that's
themselves, on
something
the
which,
contributions. Yeah. Makes sense.
the contribution they put, the capital they put in shouldn't be taxed. That's the capital. You should only be taxed on the profits, on the gains. But again, it's that's how people are treated, and I would recommend going on the yearly income, and then the distribution, the tax-free, basically.
Yeah. I think you've kind of really given us a real good overview of a lot of these topics. I think, getting proper tax advice is very important. You can see that these issues have many different layers. Very similar things can be treated completely differently. So it's really great that you've kind of touched on all these different topics. Can you? I'll definitely share some links under the video here, but tell us a bit more about how people can get in touch, where they can reach out and learn more about your work.
Okay, so first of all, I believe everything is recommendations. I wouldn't advise Googling an accountant and going with him. So basically, you should always go according to recommendation. To find us, it's quite simple. We have a website called the Saffron Group
Great.
.com.
I'll share it. Yeah.
My mobile, on the website, you have all the contact details. You can reach out to us. And as I said, my office is in Beit Shemesh. I specifically chose this place because it's halfway from Tel Aviv and halfway from Jerusalem. So it's in the middle. So that's why I chose it. We have an office in the UK, in London, in Hendon. We have an office in Zurich and Hong Kong. I don't have a US office, unfortunately, but we do deal with, I deal with many US accountants, and I get on well with them, and I understand the tax law between the countries, and that's the advantage we have.
Big benefit.
That's basically us.
Perfect. Aliyah, thank you. Really, thank you. Really appreciate you coming on and sharing all this information. That's it. I think we'll wrap it up here, and I'll be sure to share everything under the video. Be sure to follow Blue and White Finance for all your, much more financial guidance and great tips like this. Everyone have a great day.